Today's decentralized finance, or Dee-Fi, can exclude users through failed transactions and unpredictable fees. At the same time, tokenized treasuries and funds are creating new blockchain liquidity opportunities that enhance trading efficiency and the user experience.
And to explore how prioritizing fairness and accessibility can restore the original promise of democratized finance and what the future holds for Dee-Fi, we can speak with Gregg Bell, Chief Business Officer of the Hedera Foundation. Welcome, Gregg, and thank you so much for joining us.
Thank you. Pleasure to be here at Sibos.
Now, there is a growing institutional appetite for tokenized assets. How is Hedera exactly enabling treasuries, funds, and even US equities to be tokenized and made liquid within Dee-Fi markets?
Well, increasingly, Hedera, powered by its cryptocurrency HBAR, is being included in the conversation with Ethereum and Bitcoin. And really where Hedera outperforms is when institutions require a scalable solution. And so, that's what you have when you see a network that is governed and operated by Fortune 500 companies, from tech giants to asset managers and investment banks. And what we've seen and experienced recently is that issuers like Archax and KAIO have brought and tokenized funds on Hedera from the likes of Aberdeen, from Fidelity International, BlackRock, State Street, Brevan Howard, and many more. What's exciting, though, is not just the tokenization, it's what happens once these assets are now on these new rails. And so what we've seen is firms like Lloyds Bank and Aberdeen are utilizing tokenized money market funds to settle intraday margin exposure for their FX business. Similarly, there's conversations and new structured products that are coming to market where there's combinations of different funds that look more akin to an ETF or a mutual fund that are being composed on blockchain rails. So it's quite an exciting development scene.
Now Hedera has been selected by the state of Wyoming as one of the networks to host FRNT, the first US state-issued stable token. What does this milestone mean for Hedera and the broader tokenization movement?
Yes, so Wyoming has been the first state to issue a stable coin that is backed by the tax-paying power of the state itself. This really is validation for the compliance and risk frameworks that Hedera has put in place, being selected by the state for the issuance of this asset. It's similar to some of the engagements we've seen internationally with the Australian digital dollar, AUDD, as well as participation in the Project Acacia, which is the National Reserve Bank of Australia's stablecoin initiatives.
Now, Swarm recently partnered with the Hedera Foundation to launch tokenized US stocks like Apple and Tesla, tradable on-chain 24/7. Why is this the kind of real-time, always-on market important for the future of capital markets?
Yeah, so what they're doing really is bringing DeFi compliant enablement to Hedera through tokenizing US public equities. This is incredible because it not only enables these assets to be represented and available on live, always on 24/7 markets, but it now can interact with the DEXs, the decentralized exchanges, the borrow lens or collateralization markets that exist through DeFi infrastructure. And so it's creating new rails and new means to increase the purchasing power associated with these assets. Now, Hedera is perfectly suited for this type of instrument because of the fact that it really has the embedded compliance. Hedera does not enable front running, which is often associated with most public blockchains. And so you have this ability to onboard regulated financial products to a network.
Now, Hedera's council includes some pretty big names, including Google, IBM, Nomura, and Standard Bank. How does this governance model and infrastructure design give institutions like that confidence to build on Hedera?
Yeah, so, Hedera is unique in that it is run by institutions. So you really have that enterprise-grade infrastructure that comes in the form of uptime. It comes in the form of compliance-first approach. It comes in the form of scalability and transaction throughput. So Hedera really is able to onboard large-scale financial market infrastructure, and the validation and governance approach is one that is thinking the long term. There are no shortcuts. It's a 100-year vision for Hedera that's really being put forth by the likes of Google and Nomura and Shinhan Bank and Aberdeen and a whole consortium of large financial Fortune 500 companies.
And looking ahead, what role do you see Hedera playing as tokenization moves actually from pilot projects to fully regulated large-scale financial markets?
Yeah, so I think Hedera really is in this position where we're here to partner. We're here to partner and create and form those bridges, not just between blockchains, but also the interoperability between other networks like SWIFT. And so there is a huge opportunity to grow the infrastructure as now regulation is coming in place, and certainly there's more momentum and engagement from institutions. So that is fantastic to see, and the infrastructure is already here that's proven for scalability of large-scale applications, and that's really what sets Hedera apart from other networks.
Well, Greg, thank you so much for joining us nice and early here at the Sibos studio to kick things off. That was Gregg Bell, Chief Business Officer of the Hedera Foundation.